What's going on, traders? Welcome back to another video. In this video, we're going to be covering and introducing one stock that fell over nearly 15% and why you need to add this to your watch list. We're also going to cover some of the events that happened today, why the market is down today. Is this what we talked about? Is this the sell in May and go away effect kicking in? What do you guys think? I think it is beginning. For some of you guys wondering what is the sell in May and go away, let's quickly glance over it. It is basically when you take your attendees, you take your profits now, and come back towards the end of the year, throughout October or so, because historically, dating back to 1928, the returns and the gains throughout that 6-7 month period aren't necessarily the best. So might as well take some time off, enjoy your time, enjoy your life, and come back towards the end of the year. And with the markets, as you can see here, NASDAQ pulling back from these highs, we have some uncertainty. Or do we really? Take a look at this fact here, guys. Individual investors are holding more equities now than ever. That leads you to believe, baby, people are optimistic. We have some semi coming through, or came through. We have the economic recovery. People are getting vaccinated. Businesses are opening up. The economy is recovering. Things are great. Or are they really? Is the market telling us otherwise? Let's cover some of the things that Janet Yellen said that may hint at a market pullback. Also, this statistic is 41%, by the way, of financial assets. So 41% is all in the market right now, and that's according to JP Morgan and Federal Reserve. Keep that in mind. Those numbers might change in the next weeks or so. But for Janet Yellen, if you guys are wondering yesterday what happened in the market, why are we having these volatile swings? So even before the market opened, or right around 20 minutes into the market open, we were already selling off. People, the big boys, were already dumping. And then here comes Janet Yellen to say that interest rates have to rise, quote unquote, somewhat to prevent the economy from overheating. Boom, down goes stocks. I remember it was the gym, and then the stock started reversing. I'm like, what's going on? She corrected herself and said she does not anticipate inflation to be a big problem, and she is not predicting or recommending rates to move up. It's like, what is going on? We're just getting toyed around with. It's like someone called Janet Yellen and said, Yellen, what did you just say? Why is the press covering this? Why did you make the stock market fall? Correct yourself now. Hangs up. She corrected herself, and the stock market went up according to that. But people who are selling the hedgies, guys, take a look at this. Bank of America clients sold equities for fifth a week straight. Average selling rise to levels not seen since the firm began tracking data in 2008. They are selling, and the rest of us are buying. So it doesn't really make sense to me. I'm on the sidelines still, believe it or not, guys. Apart from having a small position in Twitter, which we'll cover right now, I'm still on the sidelines. I am gonna let the market do the talking for me. And as of now, if you backtrack on my videos, man, I've been patiently waiting for the market to correct, because there has to be a healthy correction. For me, on the NASDAQ, I expect at least the NASDAQ futures to at least drop to like 1320. 13,200. That would actually be a pretty decent level for SPY. At least SPY for 400. As you can see here, I have the shaded gray area, the support and the resistance line, which 400 was the previous resistance. So if it comes down and tests 400 for some support, I consider a pretty decent dip by there. And that's where I start to go in a little bit more aggressive on the day trades and on the swing trades. As of now, we only have a small position in Twitter. So this leads me to believe, guys, that these comments that Janet Yellen made, the market did react aggressively towards those comments. What does that mean? That means that any little hint of a raise in interest rates is gonna be a bomb. It's gonna bomb the markets. Think about it. We just dumped on the rumor, on the Janet Yellen comment. She's not even part of the Fed, and we dropped. Now, wait till you see what happens when interest rates actually rise. Oh man, oh man. Only time will tell. So for stocks, we have Twitter, which we've been talking about. ARK has been buying the dip aggressively. We've been wanting to get under 50, where we only have 15 shares, which is a nothing burger of a position for me. But if I get under 50, which I have a couple of alerts here at 52 and at 56, just in case it starts reversing, we are going to double, maybe even quadruple down on our Twitter position. By the way, ARK on Monday, they bought 2 blocks of Twitter, 627,000, and then another one of 307,000. ARK has been buying dips that keep on dipping. It's like when you buy the dip and it keeps on dipping. Yeah, they're in that position right now. On Tuesday, yesterday, they said no more Twitter, no more Tesla. But you know what? Let's buy some Coinbase, which is the next stock, by the way. If you see any value long term in Coinbase, This is for you, man. This is on a dip at new lows of 269. Keep in mind they have earnings. My next price target for Coinbase, according to the momentum, according to the overall market, is going to be the $0.5 mark of 250. 250 is the next point for Coinbase to reach. But I believe ARK has around like 800 million in Coinbase. So they're probably one of the biggest ones out there in Coinbase and some of the biggest believers, which, of course, I love you, Kathy. I love ARK, but I am not. I think the fees here with Coinbase are a big problem, and it's going to end up like Robinhood, a race to the zero, a race to the bottom, and the fees are going to be a big problem, man. Competition is going to come around the corner pretty soon with this crypto boom we have going on, and that might be something of a negative catalyst and a problem. No fees, that is going to be a huge chunk of the revenue being taken away. The VIX, I've been getting questions. We covered the VIX like, what, when it was at 15 bucks? Mid-April, and we saw again a huge open interest for these $20-$25 calls next month, June and July. Huge open interest. People are anticipating, this is the volatility index, quote unquote, the fear gauge. People are anticipating a huge market correction, hence why they're taking big bets on the VIX. If the market does collapse, the VIX is going to skyrocket probably to 30. We already saw the momentum on VIX a couple days ago. It was right around $22 if I'm not mistaken. No, $21.85 is the push we saw on there. So again, this is another one. If you do play options, this is probably one of the safer bets on the options trade and a little longer out of the money too. Depends on what you're comfortable with, what you see long term. Everyone has their own different risk tolerance. Let's talk about Tesla really quick, which of course I'm still remaining patient, hands tied behind my back. I have the biggest problem of buying Tesla too early and too aggressively, and with my overall views of the market being bearish, more downside to come. Well, temporary bearish, I guess you can say. I expect more downside for Tesla. We already have the chip shortage. We have a bunch of FUD surrounding Tesla, like always. But take a look at this technical analysis piece from Bloomberg. It says it's starting to look oversold when considering other technical metrics. This is as of yesterday, by the way. So even today with Tesla being down, almost 0.5%. This is almost true. It says when stocks are oversold, it can mean to technical traders that all bad news is priced in on the stock. Yes and no. Traders are still going to be selling off the headlines. That is the big problem. Things can be priced in, but the headline comes through and it's going to take another hit. I can almost even bet on that. And it says traders might look for a bounce to about 710. So even 710 on my part is where I've seen the price target to be, say, on Twitter. Not the Twitter stock, but the actual platform. People are speculating the price target of 700, 710, 720, right above the analyst average was around 645. So we're not that far off from that price, but these technicals are not looking too promising. I'm looking to get in Tesla right around 630s. From the looks of it right now, 630s is what we're looking for. We're on a downtrend since when we hit 780s mid-April, so on that downtrend. But of course, if you look at the 4-hour and you zoom out, there's a beautiful uptrend. So now for the stock we've been waiting for is Peloton, which recalled all of their treadmills. There's treadmill and there's treadmill plus. So I think there's around 200,000 plus units. And that equates to somewhat 15-20% profits, I believe I read. But it's a stay-at-home stock. It was one of the stay-at-home plays. I'm not a believer in the company, in the product. I'm more of a let's go to the gym type of thing. I struggle to work out at home a lot, especially here in LA since the gym's already opened up. I'm there, So as for an investor, I would never buy one of these products. No, but I like the technicals. I like the oversold factor here on the technicals. This is going to be due for a bounce. I do have a feeling the company is going to come up, especially with earnings tomorrow. The company is going to clear up some things. There might be a bounce to like 90, 93 bucks. I am watching this one like a hawk. I know it's not one of my favorite stocks out there. I really don't believe in the products, but I do believe in the technicals and I do believe in a bounce. Company's going to come out and clear things up. They got a downgrade from Bank of America to a neutral from a buy. And this is not their first rodeo in recalling things. They recalled pedals sold between 2013 and 2016. There's around 27,000 bikes back a couple years ago. So this isn't the first time this happens. And of course, it sucks to be in a position as a CEO like this, man. If you guys don't know what I'm talking about, they had an unfortunate situation in which the child was absolutely killed in this one, a treadmill situation where he got stuck under, and there was like 70 other accidents within that time frame. Injuries. It is not good what is happening. So let's see what happens. Let's see what the waters how the waters clear up. And there's also a massive delay in their deliveries too. Like, you could order one of these bikes, I've seen on the reviews, and it'll take you like 4 or 5, maybe, I think it said 9 weeks before you actually get a delivered bike, which is not good at all. Not good at all. So one of the last things we're going to talk about is, of course, crypto, in which I believe the action is there. There is momentum there. The Dogecoin, is it going to hit $1 before Saturday? Is probably what a lot of you guys are asking yourselves. Is it going to hit $1 on Saturday Night Live with Elon Musk? It's a very tough one. It's a very tough one. I'm going to tell you this with Dogecoin. Be very, very careful. I do have a feeling, a speculation, that if Elon does not mention Dogecoin on Saturday, this might tank. Now, there's others that are waiting, like myself, on the sidelines, that are not chasing Ethereum or Dogecoin or Bitcoin at these highs. There might be a retracement. Keep in mind, Bitcoin is going to follow the NASDAQ. It's going to follow the overall index in general. Keep in mind what happened last March. The market fell. What did Bitcoin do? It fell. So it's going to follow. And if my analysis is correct, with the market pulling back and correcting, Bitcoin is going to correct. Now, a lot of these coins are going to follow Bitcoin as well. So make sure you keep that in mind. It can fall to like 40 cents and hold there. Like the last time it hit 48 and it fell to 20. So it's not going to go to zero. It's probably not even going to go to 10, 20 cents. It might hold that 40 cents. So I do think this is going to gain more traction, and there definitely is going to be more future rallies on this coin. There has to be a correction, is what I'm trying to say. There has to be a healthy pullback and a healthy medium for it to consolidate. As for Ethereum, it's the same thing, but Ethereum is literally almost near a new high. I believe 3,500 is where we're headed to for another breakout. Can we see 4,000 this week? I really don't know. This is a very hard question. Like I said, I still have my hands behind my back, tied up. I am not chasing these highs, but if you're trying to build a long-term portfolio, I highly recommend you add on the dips. If you're going in for a swing trade, a day trade, or whatever the case may be, you're better off, like myself, buying on these aggressive sell-off, on these aggressive dips, which are bound to come. You just don't know when. And panic can be multiplied times 10, times 20. Like the whole GameStop situation when they got halted, Robinhood, by the way, Dogecoin crashed Robinhood, and you have these panic sell-offs with especially with a lot of the new investors who tend to panic sell. It's gonna happen. You just don't know when, and I don't want anybody to get screwed over. But basically what I'm trying to say is just be safe. Don't throw all your savings on here. Diversify, play it safe, know what you're getting yourself into. Basically, if you're willing to risk it all, the gains, if you are correct, are going to be ridiculous. I've seen people post screen. Dogecoin made a lot of millionaires. Crypto has made a lot of millionaires. Just be very, very careful. Be very careful. That's all I'm trying to say. That's pretty much it for this video. If you guys did find this video enjoyable, learn something new, make sure you drop a like, leave a comment down below, subscribe if you are new, and I will see you guys tomorrow for another market live stream. Take care, team.